What's going on, guys? Welcome back to the channel. I'm Steve. Welcome back to another video. Today I want to talk to you about a value stock versus a value trap, and what the difference is, and how you can take a look and see if everything works out for you in your investing journey with what I talk about today. So getting into it, we'll go with the characteristics of a value stock first. Now, a value stock has the characteristics of something where it's has a low price book value, meaning it's somewhat undervalued, low PE ratio, and a high dividend. Now, these kind of stocks are usually the stocks that fly under the radar, or they're not quote unquote hot stocks, right? So these are the stocks that Warren Buffett, Peter Lynch, and folks like that, they're always looking for. Like when you look on TV, CNBC or something, and they'll say, "Oh, it's not no value out there. We're not spending money on our stocks. We're not buying anything right now." This is what they're looking for. These kind of value stocks. These under the radar, low flying stocks that nobody's not really paying attention to because they're not in the public eye per se as being popular. Now, types of these stocks. They trade below their perceived fundamental value most of the time. That's why you don't hear about them, because nobody's really talking about them, or they're like a boring type of company at the time. Qualcomm is an example. Disney's an example. Target, Nvidia, FedEx. FedEx is a good one. Facebook. That's another example of that type of value stock for investing. Now, these value stocks, if you can get in at the right time and you hold on to them, they are usually companies that are very good companies. They're companies that you can hold on for the long run. And if you catch them at the right time, you'll get the 10x and all of that type of stuff, depending on the growth of the company. These companies, if you look at their fundamentals and their earnings, they usually have good earnings. They also, if you look at their fundamentals and their financials, usually they have, for their revenue, it's a steady climb. 5-10 years, it's steady. It'll go up and down. Now, they might have a down year where the money goes down just a little bit, but it's a constant over the time. 5-10 years, you see they making revenue. It's stepping up. It's going up. So that's where you get your value from, and so that's a value stock. Now, a value trap, and this is very. Pay close attention to this. A lot of these stocks are values are perceived as value stocks. Like I said, they value traps. Now watch, pay attention closely. These companies usually have a negative or damaging news associated with them. Often, sometimes. It could be a bankruptcy, legal problems. They got caught cheating with taxes, money scandals, any kind of problems that are associated with these companies. Now, a lot of times this is hidden and you don't see it, or a lot of times it's where it might have happened 3 or 4 years ago, but the ramifications still stay in the company now. It's a fall in turnover in sales, meaning they don't have return customers. Return customers are not coming back to the company, or they're going to somebody else, another competitor. But this usually happens when another company comes into the same market or sector that they're in, and they do a better job, which is common sense. They're not built for competition. They don't have the moat. The moat is gone. They don't have the moat anymore, or the competitive advantage is gone. Like I did a video the other day about how and when to sell a stock. A lot of the candidates for these stocks are value traps. A value trap will suck your money into it, and you will never get anything out in return, and you'll just be stuck with it. And worse for wear, better off than you were when you first even invested. So 3 to 5 years in the same time, you could be down. Even with the dividend, you can still be down. So it's not even worth the investment when you can put it in something else and then see real growth. You know, sometimes boring is better. Examples. Now I wrote these examples down. Kohl's Corporation, Vale, the mining company, Suncor Energy. All of these have revenues. If you're looking at, I'm just using revenues again. The revenue would be 20 million, 22 million. Then they go down to 18 million. This is per year. Then it might go down to 16. Then it might go up to 41. You're like, it's just all over the place. No stagnation. Not a steady income stream. Not steady. It's not steady at all. Another example. I mentioned this yesterday of value traps. And this is how a lot of people get caught up. Airline stocks. Gaming stocks like casinos and stuff like that. Ford is one. Ford is a value trap to me, in my opinion, and investing in it. Ford don't do nothing but sit there. You know, I mean, the revenue be off, like, and then it's cyclical. It's like I said, it goes with the economy. You know, they're raising interest rate right now. Ford gonna take a hit. You know, and if you're already down in Ford and you stuck, you gotta wait till you can even sell it. You can come up to sell it. You know, but as far as value stocks and value traps, all you have to do is just, you know, take and start studying a little bit about, besides the company, the stock price and the PE ratio and all the good stuff. You know, you can go on places on the internet, or you can even get books that'll teach you how to read financial statements. You know, get in on these conference calls. That's why it pays to know about the companies you're in, and then the companies you're invested in, and only invest in what you know, or what you have a general idea of how something works. But, you know, any stocks that you have, you know, always look up the news on those stocks. You know, constantly just keep up with your investments, because you can avoid a lot of stuff like this, being in these value traps, and your investing experience will be totally different, along with your knowledge and your wisdom as it grows with your investment journey. Now, that's about it for today. With that, you know, I appreciate you stopping by. I hope it was educational for you. And as always, comment, like, and subscribe. And I'm Steve, and you guys have a good weekend. And I'll see you guys later. Thank you.